Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market AM report for the beginning of the week, Monday, May 11th, 2015. We had a tremendous week last week with the jobs report culminating on Friday, and they were plentiful winners on the Clueless 8 list. I'm not going to bother going through each of them right now, but it was just a very, very strong finish to the week. Let me give you a quick synopsis what I think might be going on this week. I am not going to go ahead and push too many trades today, or at least the first part of the morning. I believe that the market needs a little digestion. I still believe very strongly that the third week of the May 15th to this Friday, which is options expiration, monthly options expiration. The key word is monthly, which tends to be a positive event. However, the caveat remains that prior to that, we do see some pretty heavy duty volatility pullbacks and irrational, I shouldn't say irrational, but sudden choppiness. I expect that to happen as always around the Wednesday time frame, if not earlier. We have a bunch of stuff going on this week. Very, very importantly, you have the Greek discussions ongoing. What comes out of it, every headline will be rocking the markets back and forth. The overall fundamentals in the market based on technicals, overall technicals in the market overall are strong. We are, as I walk you through the charts a little bit, we are bumping on the upper Bollinger on the Dow Jones Industrial Average. I've showed that clearly. I want everyone to review every single one of my charts that are posted on the real-time Twitter feed, as well as access them on, excuse me, on the website clueless8.com/charts. So a couple of things to keep in mind. We had a major Chinese rate cut that also affects the deposit rate in their banks. China is clearly trying to stimulate their economy. I don't want to go into a long-winded commentary, but I've been talking about this for months now, and it happened. I believe that there's more stimulus along the way. The reality of the situation is it's not what the news is, it's how the market reacts to it. The Asian markets reacted very positively. The European markets are mixed. So let's take a look at the technicals here to see a roadmap of what might be going on here. This is the E-minis here. As for a lot of the new members, just keep in mind the E-minis are basically what happens behind the scenes, and this is the proxy for sort of the market for a trader's roadmap, or what I call the trader's GPS. And by tracking the futures, you can work within the realm of whatever trades you're putting through intraday as well as intra-week. And people who have been with me for a while, they know very well that I've very effectively navigated and forecasted the E-minis in order to maximize profits on the front side, which would be trading stocks, both on the short side and the long side. So here we are with the E-minis. This was the move on Friday, this big candle. As you can clearly see just by looking at this, this is a perfect pattern symmetry. If somebody knew nothing about the market, and I explained this very, very clear and in a very detailed manner and in a very simple manner to all my coaching session members who have been extremely happy with my ability to explain the broader picture in the markets. As you can clearly see that even if you knew nothing about the market and you followed this pattern symmetry, it's just amazing to me every time I look at it how clean the patterns are and how symmetrical the moves are. You had a large drop here that started off on Monday, or I should say, yeah, on Monday, and the whole retracement occurred by the end of Friday. So now we're creating a flag. So I'm going to draw this directly here. This is also known as a consolidation channel, or you can call it a bull flag. Now keep in mind that high frequency trading programs and algorithmic algos, as I like to call them, that are prevalent in the market, they can change these patterns dramatically. Now, the two scenarios here that are in play. I'll give you both the bullish one and the bearish one, and I still believe that dips can be bought. That's just based on my comprehension of what the economic background is on a global basis, as well as what the seasonal basis is for the monthly options expiration on Friday. So here we are. Now, if we break below, let me give you the bearish view first. Let me get the drawing tool. Okay, so this is the bull flag here. If we break below the bull flag or the consolidation channel, then you're going to drop rather quickly. And if that happens, if we break below here, for example, and keep in mind the E-minis just to add 6 or 7 points to that to arrive at the actual number value for the S&P 500. So if it's 2102, for example, it's actually 2109 or so on approximately on the S&P 500, on the SPX. So here's a bull flag just the way we had here, right? And the bearish case would be that we break below this and we have a rather large drop. That drop would bring us down towards the 2080 level. That roughly translates into 2087 or so on the S&P. And from that point, we would make a we would basically find support. If we and then the support would come support and the bounce would bring us back towards the 2090 level. And if we fail there, then we're going to visit these lows real fast. I believe that this 2060 low or so, 2057, 2065 on the S&P 500, if you want to look at it that way, is a strong support. So that's the bearish case, that we break below the bull flag, and I've been watching this very carefully, and we fall quickly. This is a large drop. This is a drop of about 30 or so on the S&Ps, on the E-minis. So that's about 200 points on the Dow, this move here. Okay, so be prepared for it. You know, volatility is the new normal. I don't want to keep on ranting on, but embrace volatility. Don't be scared of volatility. You know, be cautious, but then at the same time, take advantage of it. You know, SPY puts tend to give you a double, if not a triple, on these 200-point type of drops in the market. Bounce up. We're going to watch this level very closely. We fail here, then we're down to these lows. Period. That's it. That's a bear case. The bull case is on a short-term basis that going into Wednesday and some sort of positive outcome from the Greek negotiations, and we'll be hearing headlines all through the day going into tomorrow. You're going to see, so that would be a move up, and that move would basically bring us back to that promised land of around 2120, and I don't believe that we're going to just breach that right away. So if we get towards 2120, that would be a short-term, maybe a interweek top, which pulls us down back towards testing this level here. Okay, so let me show you some lines here. So back towards testing 2115. So we make, this is the bull case. We make a move up here, then we pull back. We hold this line. Okay, 2113 or so on the E-minis. It's about 2120 on the S&P, and then we make a move up. So that would be the bull case as we enter the last phase of May. I still believe that we end May on a strong note. I was explaining to one of my members on the coaching session that we had a negative first quarter. I doubt if the fund managers can afford to have and those are the guys who run the big money, all right, that they can afford to have a negative second quarter. Could happen, anything could happen, but I doubt it. I think they're going to print they're going to print this month as a positive, and as we get into the June, the June 30th is the end of the second quarter, and I believe they'll end it on a strong note. So we'll have to see. This is a very choppy market. And as you very well know, I change directions rather quickly. I post all my trades, my trades that I put out to my members, as well as participate in the Twitter real-time feed, as well as in the chat room. So you know you have to watch it constantly to see what's going on. So that would be the bull case, that we break out of this consolidation channel, move up, pull back a little bit, and move up again. All right. But as you can clearly see, we're very close to that upper band, and this is basically a trading band, right? 2057 up to 2120. So do I think that this pattern is going to get, this is a volatility pattern. So this pattern is going to get completed? There's a good possibility it does. So that's basically the quick synopsis of the market. Now, very importantly, the reason why I explain all these very in detail is because it doesn't matter what trades you take, especially in the high moving, high momentum stocks, which generate the highest number, highest ROI, return on investment, on a very short term basis, and on a swing basis. They will not work if the market is not cooperating. Period. That's it. Let's take a quick look at the Russell 2000. Now, this is more of an interesting, this is a macro falling wedge. I called it down here, and it got to where I thought it was going to go, which is around the 1240 level. At that point, there's a little consolidation going on. Now, a perfect scenario, a bull scenario would be the same story here. If this is it, if we break below this, we're going to come down and test this quick. We break below that, we're going to come down to the bottom of this, which would be the 1190 level on the Russell 2000 futures. Now, keep in mind for new members, we don't trade. I'm not explaining to you trading futures. I'm giving you the background so you can operate efficiently on the surface, which is trading the stocks that you're trading. So this is the bear case. We break below this red line and we fall, and that's the 50 and the 34. So we want the 50 and the 34 moving averages right here to keep rising, which would be fantastic. So the bull case would be that we create a consolidation triangle or a consolidation channel, whatever you call it, and then we break out. This pattern is likely to be filled. We probably get back towards 1280. That's about 40 points from this level here, where I said it would go, 1240. It went to 1240, okay, right from here. That was a substantial amount of money. The calls went from $3 to about $14. And of course, we took profits along the way and staggered it because there's no way of telling. This is not a straight line move up. There's a lot of zigzags along the way. So the bottom line is that we need to break out over 1240 on the E-minis, and you can do all this on your screen. You can put this future screen as one of your windows, and then we get up here. There's a lot of room to move off this level. The first line of resistance will come around 1260, and as you can clearly see, a little consolidation. If it moves up here, okay, a little consolidation. Let's see, moves up here, pulls back here, and then makes a move up here. Whichever the case, I'll be looking to buy tactical dips, looking to short tactical tops, and hopefully having finishing off this week on a very strong note. However, word of caution: this is the middle of the month. And as we get towards the 15th, you know what happens prior to the 15th. We get a jolt to the system. Middle of the month, give or take plus minus 2 days, the 15th of the month, we always get some sort of reset corrections. Again, we pick Wednesday because Wednesday seems to be reset days. Tuesday seems to be hump day. That's the old saying in the business. So if we rally into tomorrow, you sell all your trading stuff or whatever, you take a good portion of it off the table, and then you can short the Wednesday pullback, and there we go. If we do have a sharp pullback prior to Wednesday, then the Wednesday's pullback is negated, and we'll see what happens. It's happened a few times. Let's take a quick look before I run out of time on the Nasdaq. This is the proxy for the Nasdaq 100. This is the E-mini Nasdaq futures, and as you can clearly see, this is definitely a positive pattern. It's broken out here. Let me just show you. First of all, just concentrate on the pattern symmetry here. It's a beautiful pattern, okay? You had a head, you had a right shoulder, left shoulder, and then we're basically at that shoulder pattern. Sorry, this is the right shoulder, and so we broke down below that, right? We broke down below the neckline right there. So this is head and shoulders pattern that I'm talking about. Now we have an inverse head and shoulder. You got a double bottom head here. You have multiple left shoulders. You're going to see a right shoulder develop at some point, probably by Wednesday. And at this point, we're breaking out. You can see that clearly right here. And the next move would be up here. So that would take some of these high-flying NASDAQ stocks up a couple of points. That's it. So that's your quick Monday morning report. Look at the economic calendar. Engage with me in the chat room. and we move on. Thank you for listening.